Hi everyone, this is Vinod here and welcome to my channel. In today's short video, we'll look at what is Sam's indicator and what does it indicate. So Sam's indicator is triggered when the 3-month moving average of US unemployment rate is at least half a percentage point or more or higher than the 12-month low. So this got recently triggered and which has created a lot of panic in the markets, and there has been a stream of bad news along with this triggering of Sam's indicator, which is the other bad news is the fallout or the effects of the reverse Japanese carry trade reverse carry trade being played out because of the interest rate rises in Japan. So the hedge funds are being forced to close out their positions in order to because of the effects of the Japanese yen reverse carry trade. So for the purpose of this video, let's focus on what is Sam's indicator. So as I mentioned, the Sam's indicator is triggered when the 3-month moving average of the US unemployment rate is half a percentage point, or 0.5 percentage point or higher than the 12-month low. Was one of the data points or one of the indicators that was developed by the policymakers. So in order for them to gauge this economy, like the unemployment rate is a very good indicator of how the future might play out. So this was actually developed by one of the Fed employees by the same name Sam, and and it has always been right or 100% accurate in predicting the recession or the start of a recession. So what does it indicate? It indicates whether we are in the early stages of a recession. And so what will be the next step of actions? So the markets will be very cautious right now. So we can see how the markets have reacted in the last couple of days, like Friday and Monday. There have been a huge sell-off because of the stream of bad news, because of Sam's indicator being triggered, as well as the effects of Japanese carry trade being played out. And the markets have actually hit a all-time high recently, and they were waiting for some kind of a panic or some stream of bad news for the market to quickly retrace back. And from here, there will be the markets or the analysts as well as the institutional investors will be waiting for the policymakers' reaction, Fed's reaction. How does Fed react to this indicator being triggered? So it is important to note that they will not be relying just on this single data point. They'll be using a lot of other data points, a lot of other indicators, other signals, other market data, other economic data too, and they will be acting accordingly. Now, there has been a lot of noise on Twitter and YouTube and about whether there will be an emergency Fed meeting, whether there will be an emergency rate cut, or whether they will increase the basis point from half a percentage point to 75 or some. And these are all speculation, and the market will be waiting for official policy action and news, and only then we'll know how the markets will proceed further, factor in that information and move either upside or to the downside. If there is more bad news coming in, we will be moving down, and if there is some kind of a support from the policymakers, then we'll be taking support and then moving up. So as traders and investors, we need to be cautious during this uncertainty period, and once there is more clarity, the markets will be reacting to the news. So this was one of the charts that was shared on Twitter, and this compassed the S&P 500 monthly average, and the blue one is indicating the months in which the Sam's indicator triggered. If you look at all these data points, you can see that the Sam's recession indicator has been 100% accurate in predicting recession. But what is it? So it is actually a recession indicator. But what if you look at these data points is that it has been triggered either at market high or it has even been triggered at market low. So how the markets have reacted after this indicator has been triggered? In some cases, they have been triggered at the beginning of the market rising or at the low of the market. So what does this indicate? Like, this is actually an indicator for recession. It is not a market indicator. Even after the recession, the SAM's indicator has been triggered, the markets have few data points have shown that the markets have continued to rise after that, because the policymakers have some tools like the interest rates, and they have a lot of other tools to react to this particular indicator being triggered, and we will have to wait and watch how the Fed reacts to this particular indicator being triggered. So hope you understood what is SAM's indicator and how as traders we have to factor in this information. So we have to be a little bit cautious around this time, especially around because there have been a stream of bad news, and we'll have to wait and watch how the policymakers react to this particular situation. Hope you learned something new. If you have learned something new, please do consider subscribing to this channel, and also share it with your friends. Thank you.